How to enter the stock market. What you need to do to enter the stock market. The stock market is a dynamic marketplace where you can buy and sell company shares to make money. But how do you get started? Let's take a closer look at how individual investors, institutional investors, and companies get involved in the stock market process. How individual investors enter the stock market. To trade on the stock market as an individual investor, you need to follow these steps. Choose a brokerage firm. The first step is to choose a brokerage firm. Brokerage firms are intermediaries that allow you to trade on the stock market. When choosing a firm, it's important to consider factors such as commission rates, services offered, and reliability. Open an account. You need to open an investment account with the brokerage firm you choose. To open this account, you will usually need to provide documents such as your ID and proof of address. Deposit money. After opening your account, you need to deposit the amount you want to invest. Education and research. To succeed in the stock market, it's important to have knowledge of fundamental analysis, technical analysis, and other related topics. You can attend training sessions organized by brokerage firms or learn from various sources. Trading. Once you have received the necessary training, you can start buying and selling stocks through the platforms provided by your brokerage firm. How institutional investors enter the stock market. Institutional investors, such as insurance companies, pension funds, and investment banks, typically trade in larger volumes. The process for institutional investors, which is more complex than for individual investors, works as follows. Research team. Institutional investors usually have large research teams. These teams analyze companies in detail to make investment decisions. Portfolio managers. Portfolio managers manage the institution's assets and make investment decisions. Cooperation with brokerage firms. Institutional investors often work with multiple brokerage firms to handle large volume trades. How companies enter the stock market. Initial public offering. For a company to be listed on the stock exchange, it must conduct an initial public offering, IPO. An IPO is the first sale of a company's shares to the public. The IPO process is quite complex and is usually carried out with the support of an investment bank. Preparations. Before an IPO, the company organizes its financial situation, prepares investor presentations, and obtains the necessary permits. Pricing. Investment banks determine the selling price of the company's shares. Share distribution. The shares offered in the IPO are distributed to investors in a certain proportion. Start of trading on the stock exchange. Once the IPO process is complete, the company's shares begin trading on the stock exchange. In summary, to enter the stock market, individual investors need to choose a brokerage firm, open an account, and receive training. Institutional investors have a more complex structure and typically trade in larger volumes. Companies go public through an IPO to start trading on the stock exchange. Caution: investing in the stock market is risky. Be sure to do your own research and consult a financial advisor before investing. This information should not be considered investment advice. The author and publisher cannot be held responsible for any potential losses.